Welcome back. And in our top business story, Hilal Bank, owned by the Abu Dhabi Investment Council, is looking to issue $1 billion in Islamic bonds by the end of the year. According to a local paper, the bank's officials stated that the bond issue will help build a portfolio for future bond sales that will set a benchmark for the bank in the market. No official details have been revealed as to where the sukuk may be listed or the size of the programme. Experts say that as the bank does not publish financial statements, investors turn to confidence in ownership. And with 100% ownership from the government, investors may look to this as a key driver in their risk assessment. Al Hilal Bank posted earnings of $38.1 million last year. Gulf Telecoms company will see profits drop and customers move to competitors should they not evolve with the changing business landscape. That's according to a report from Booz & Company. The consulting company stated that the GCC telecom sector is facing stagnated growth, increased competition and is up against consumer sophistication and therefore needs to step up their strategic outlook. Du and Estilat were in the UAE. Here in the UAE, however, are conforming to this strategic evolution through moving to faster fourth-generation broadband, offering advanced technology at a lower rate. The report added that market saturation seems to be settling, but operators need to prepare for constrained growth and respond through leaner organisations, increased marketing expenditure and the reduction of other costs. The UAE's camel industry is cashing in, with more than 300,000 camels that produce 40,000 metric tons of milk per year. Camel products are proving to be as popular as ever, mainly coming from the country's two farms, Al Ain Dairy and the Emirates industry for camel milk and products. According to company statistics, Camelicious products have risen almost 100% for the first 3 years since its launch in 2006, and then an average of 25 to 30% every year thereafter. Emiratis and Arabs make up 75% of camel milk sales, while Asia contributes 15% and Europe and the US at 10%. Experts say that increased awareness of the produce and its health benefits is boosting demand. The Emirates industry for camel milk products currently exports to Jordan, the Maldives, Kuwait and South Africa and are in talks with Qatar, Malaysia, Singapore and Brunei. And with that, let's now look at the stock indices across the GCC. And in our world business news, EU, IMF and ECB mission chiefs for Greece arrived in Athens on Monday for an inspection visit that will determine whether the country will receive a sixth aid tranche from its international lenders to avoid bankruptcy. The inspectors, referred to in Greece as the Troika, held their first meeting in what sources said were expected to be tough decisions with the government. A source close to the inspectors said last week that Greece risks missing its 2011 fiscal targets. Greece must cut its budget deficit to 7.6% of GDP this year from 10.5% in 2010 under the terms of the bailout. Finance Minister Evangelos Venizelos told lawmakers on Friday that the government will come very close to meeting the targets if it fully applies the austerity measures already agreed. China's banks are to include margin deposits as part of their required reserves. In response, Asian stock markets rose on Monday, but Shanghai stocks bucked the trend. Margin deposits are funds received from clients to secure documents like a banker's acceptance, letters of guarantee and letters of credit. The requirement will pull nearly $700 billion from the market, in effect acting like monetary policy tightening. Experts say that margin deposits are not counted as part of the official required reserve ratio, so the impact is significant. However, with prices likely to stay elevated due to high commodity prices and food production shortages, Beijing may not be done yet.
The chance of another rate hike before year end is still there, even if it's largely mitigated by this broader base of required reserve. And also there will be a continued credit quota restriction, and it's unlikely for us to see the annual and the total renminbi credit to be higher than 7.5 trillion, and there are still likely to be stringent monetary policy into next year.
And finally, Finance Minister Yoshihiko Noda will become Japan's next Prime Minister after defeating Trade Minister Banri Kaida in the ruling party leadership runoff vote on Monday. Noda, who came in second in the first round of voting, got a sound majority in the second round with 215 votes to Kaida's 177. The 54-year-old Noda must now cope with a resurgent yen that threatens exports, forge a new energy policy, and find funds to rebuild from the March the 11th tsunami, at a time when huge public debt has already triggered a credit downgrade. No Japanese Prime Minister has lasted much more than a year since 2006. And before we go, here's a quick overview of the oil, precious metals and currency markets. After that, we have the day's sports news for you.